Okay, let's get right into it. The housing market, it can feel like a total roller coaster. And just in the last few weeks, it hit this massive, completely unexpected loop-the-loop. We saw this sudden, really dramatic surge in activity that honestly caught a lot of us by surprise. So, the big question is, what on earth just happened? Let's break it all down. It all boils down to this one number right here, a plus 11% jump. And that's not over a month. That's how much mortgage applications shot up in a single week. A leap that big, well, that's a huge signal that something fundamental just shifted in the market, and it shifted fast. And to put that 11% in perspective, this wasn't just, a pretty good week. It was the strongest week of the entire month. All of that action was crammed into just a few days. And it was all because of one very powerful catalyst. So what was it? What caused this crazy sudden rush? Well, it all came down to a single magical number that buyers and homeowners have been waiting to see for a very, very long time. And there it is. For the first time since 2022, the average rate on a 30-year fixed-rate mortgage dipped below 6%. Now, you gotta understand, that 6% mark has become this huge psychological wall for people. So seeing the rates dip below it, even by a little bit, felt like a massive green light. And wow, did people react to that green light? This wasn't just some number on a spreadsheet. For a lot of folks, this felt like a brief, maybe fleeting window of opportunity. Whether you were looking to buy a new house or just refinance the one you're in, the message was loud and clear. You better act now because who knows how long this will last. Okay, so we get why the surge happened. That sub 6% rate was the trigger. But who was it that was actually jumping into the market? When you start to unpack that 11% increase, the story gets even more interesting. So both sides of the market definitely got in on the action. New home purchases saw a really healthy jump, almost 9%. But the real engine behind this whole boom, that was refinancing. Applications to refinance existing mortgages just exploded, shooting up by a massive 14.3%. And if you want to know just how dramatic that refi surge was, get this. That weekly jump meant the refinance index was 109% higher than the exact same time last year. That is more than double the activity. I mean, that's just a truly staggering increase. So what gives? Why such a huge jump in refinances? Well, according to Joel Can over at the Mortgage Bankers Association, it's pretty clear. It was homeowners with those bigger loans who saw this as a golden opportunity to lock in a lower rate and seriously cut down their monthly payments. This wasn't just window shopping. It was a calculated financial play by a ton of people. But, and this is a big but, just as quickly as this beautiful sub 6% window opened, it slammed shut. The very thing that created this whole frenzy, those low rates, they just vanished, almost overnight. And this timeline just shows how incredibly fast it all happened. So early in the week, we've got those amazing rates below 6%. Then the weekend hits. News breaks about a U.S. strike in Iran, and that sends these ripples of uncertainty through the entire global economy. And that kind of instability, it makes investors nervous. They move money into safer things like bonds, and that, in turn, pushes mortgage rates way up. So by Tuesday, boom, they'd spiked right back up to around 6.13%. Just like that, the party was over. And this is just a classic example of how events happening halfway around the world can have a direct impact on your wallet. Major geopolitical news creates economic jitters, and that makes lenders a lot more cautious. It can really spook potential home buyers, and it has a long, long history of cooling off a hot market in a hurry, which is exactly what we might be seeing in the next few weeks. So, where does all this leave us now? We went from a total frenzy of activity to a sudden screeching halt, all in the span of about a week. You could say the market is now officially in a state of flux. All right, so let's put all the pieces of the puzzle together. We had a really brief dip below that 6% magic number, and it created a huge, but very short-lived, surge in mortgage applications. The main driver was homeowners, especially those with larger loans, jumping on the chance to refinance. But then, a global event completely reversed that rate drop, just like that. And now, the future for both rates and buyer activity is, well, it's anyone's guess. And all of that leaves us with the one big, lingering question. Was that crazy week just a fluke? A tiny, one-time window of opportunity that's now slammed shut for good? Or was this a sneak peek of what's to come? The start of a new, much more volatile trend, where the housing market can be turned on its head by global news overnight.